Hey guys, this is Bruce Marshall from Simpler Trading. Congratulations to everyone that got this trade that we're about to talk about. Really nice win on a butterfly trade here in the SPX. Now I did a video about this on February, I recorded around here at the end of February and I posted on YouTube first part of March. I think it was the second or third or around there, something like that. Anyway, and I'll put a link down. You can go back and watch that video because what I did in that video, I showed the reasoning why. That's what we're going to talk about today, the reasoning why and how we came up with the setup, how I, came up with the numbers and the strategy and all that kind of stuff. But we showed different variations. I went over regular flies. I did a 4-part series back then. Go back and check that out. It's really good and it applies to any time frame, right? So it's good, really good information to know. Good tips and tricks. We did debit spreads. We did SPY. We did SPX. We did XSP, that type thing. But for this particular trade, I posted and we did different expirations. I did an April expiration, which that trade is still valid. I did a 17 April. In our live trading room, I posted this. This was actually on March 2nd, 2:30. This in our live trading room, and I used this March expiration because you can have multiple hedges on multiple time frames, right? And I'll show you why in just a second. We'll look at the chart. And I post this as one contract here, 6700, 6550, 6350 as a broken wing. And today, as we are speaking, this expires today. This is March 20th. This is an AM expiration, and today is March the 19th. So this AM expires at the close of business today and is priced off tomorrow's opening, which is a European-style expiration on SPX. If you don't know how that works, you really need to know how that works because it applies to the NASDAQ, the NDX, the Russell, that type thing. I did a separate video on that talking about European-style expiration versus regular-style expiration. I'll put a link to that as well. But let's look at the chart and talk about how this thing came about to begin with. So if you've seen any of the videos that I've done earlier in the year, this is the beginning of the year, and we started this. We kind of started really kind of going slower. Slower the upward climb trajectory that we've had all last year, and that's kind of started flattening out after the beginning of the year. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? And I've been saying for months, we're in this downward trend. And what I was looking for was this trend to kind of keep going like this, and we would end up out here and needing some hedge in, April, May. But what happened was that if you can see the trajectory of the, downward trend started accelerating here very recently, and a lot of that's to do with geopolitical and oil and that kind of thing, right? I was targeting this 200-day moving average as kind of target number one right here. Right there's that red line is 200-day moving average, and then the second target over here is this double bottom there from October low and November lows from last year. And again, it really was that simple, targeting this area primarily, and that puts us about 65, kind of roughly 65.50. And again, that is where we put our butterfly, 65.50, the center strike, 65.50. Now again, we use some butterflies for the March expiration. We've got butterflies for the April expiration. I think by May we will have turned around, and because this sell-off is accelerating, I think that might actually happen even sooner. So with this particular one, and I'm scrolling up over here, so today we're down about 50 points. We've been having a lot of hard selling lately. Anyway, if you did 10 contracts on this butterfly, it's worth $91,000. Great trade. This might go to a full pin today on this. Pretty crazy. It's not that often that you get a full pin on a butterfly, but this is really what you want to see. Again, this one is an AM expiration. Let me show you how that works real quick. Let me switch this over to this. and we'll look at the expiration. I'll show you. So we've got XSP here. And again, I put some trades together on XSP for you guys as well. Okay, so if we look right here, all right, so this is the AM expiration, 20 March. Well, here's another 20 expiration. This one shows 0 days to expiration. That's today, and this shows 1. Well, what's the difference? Well, this one is AM, and this one is, technically it's a PM, but it's also now called a weekly. You know, back in the old days, they called them PM expiration, right? Again, if you need more clarity on that, be sure and go check that video I did on European-style expiration. But again, to recap on the concept of the trade, felt like this thing was in a channel moving down, down, down. Really want to target this area. Wasn't sure on this channel as we go down, we have lots of sharp moves higher. So I kind of wanted to limit the risk on the upside, especially on this particular trade was a shorter time frame, right? This one we went to March. Now the other one still have the one out to April. Right there. This is 20 March, shorter time frame. What if we get in this downward trend and all of a sudden we have a big gap up higher? I think we would ultimately come back down, for example, April. But because of that, I wanted to limit the risk on the upside, and that's why we use this broken wing butterfly. Now, I went through in the video of examples of a regular fly, one that we can get a credit for, which is really cool when you can do that. But on this has $5.55 of risk, and let me show you. So I will, you know, I don't know what size account people are trading. Primarily the people that I work with are, you know, professional people. We're working with retirement accounts, nest egg type things, and you know, we do a lot of covered calls and collars and, you know, conservative option income strategies, right? Well, you need some hedging. If you've got longs in your portfolio, you need some hedgings, right? Hedging. So primarily, for me, the best vehicle is SPX, right? So on one contract, $5.55, that's where I got filled. You got $555 of risk on the upper end if we were to go ripping higher. $5,000 of margin. And one thing to note on here, and we talk about this a lot, that if you have a regular, you know, a regular butterfly like this, and you take this risk off in the form of a broken wing like this, you take that risk off and all you're doing is dumping the risk over here on this side, right? Which makes, you know, this deeper. So it's not going away. You're just shifting it from one side to the other. Again, in case the reason is if in case this thing rips higher, you won't have as much heat on the upper end. And on the downside, you always have the ability to, you know, to pull the plug if it's really free falling down this way. So it's kind of a win-win on this structure in certain situations and scenarios, right? But again, this one, it's working out perfectly. Again, it expires today at the close of today, being an AM. It is priced tomorrow. So again, be sure you know how to do that, but or how that works. But this is, I posted on one contract. If you would have done, and that's almost $9,000 on $500 of risk. That's pretty good, right? So if you did 10 contracts, again, you're up about $90,000. If you did, let's just say, and that's not really a large trade. If you did, let's say 50 contracts, now you're up, that's some actual real money right there. So you're at $450,000, right? Again, assuming you're trading a $1 million account, couple $1 million account, this is a good hedge. This is not a speculative type trade. It's a hedge because you've got a bunch of longs. Maybe you've got Amazon, Google, Home Depot, whatever, and you're wanting some protection on the downside if this, you know, if the market goes down, and guess what? It has, and this pays you off very handsomely. So go back and watch that other video. I did a 4-part series on why you want to hedge and how to do it. I did one on the SPY, I did one on SPX, I did one on XSP. All of them have valuable information and tidbits of nuggets of gold in there, so go back and check those out. But I did want to mention this and post this and show you guys the result of one of these when it works fine. And again, if it didn't work, hold on a second, if it didn't work, one or two things happen. It either goes up here and it's, you know, you're going to have a small loss, or it goes down here and we pull the plug before it gets any, you know, takes any real heat. So If you want to see more like this, let me know in the comments down here. Obviously, like and subscribe. If you missed those first videos I did on hedging, be sure and hit the notification bell so you know when these things come out, because I always put out content that's timely with ideas and things like that of how to manage a portfolio, how to have nice option income trades, and all around portfolio management. So be sure and do that. I will put a link also to our trade room. Again, if you were in our live trading room, you would have gotten this trade because we trade in there all day long with live money, real money. So I hope that helps. Let me know if you have any questions, and I'm more than happy to answer. I'll do a video on anything. Just let me know if there's something that you want me to cover, and I'm glad to do it. But again, links all down the bottom, and let me know if I can help. So thanks for your time, guys. I appreciate it, and I will see you in the next video. Thanks. Take care.